We are back with another weekly Forex forecast. Hope you all had a great trading week, and let's get prepared for this trading week ahead. On the DXY and the US dollar, a very significant event has taken place as we push below this low, giving us a weekly downward trend line. It is definitely a bearish sign for the dollar. However, I am here to remind everybody these dotted lines here is a monthly demand, and it is still in control. And for reasons I'm not going to get into here, I'm not calling this zone removed, although we did pierce below it. I'm not going to get into a lesson here. I'm not calling this zone removed. To me, it was just some sort of manipulation, and the monthly demand is still in control. So that is very important to consider. The big question now is this just some sort of big fake out on the US dollar to get everybody to continue to short, thinking that the US dollar is weak as they're shorting right into monthly demand? It is definitely something to consider. This is why I use multiple time frame analysis, because we've seen multiple reactions off of our weekly demand zone. And I remember everybody commenting here, oh, we're so bullish the dollar. Both times we pull back into our weekly demand. So I am still somewhat bullish on the dollar, at least bullish until we hit this trend line. And then again, since the monthly demand is in control, we have to kind of go with that. But I won't deny, the weakness we have seen in the DXY. So I am recording this at about 5 p.m. Eastern time. We still have 2 hours left for the DXY to close here. We are well above 50% of the mark in this 4-hour supply zone. So to me, it looks like we are going to break this supply. And at the time of you guys are watching this, it may already be broken, right? Like I said, there's still 2 hours left. I'm not going to wait all night to record the forecast. But if this does break, what I'm expecting to see on the 4-hour chart is, again, so we are into the 4-hour supply. Not only that, we have a very nice looking 1-hour upward trend line. So it is looking a little overextended. Let's throw the channel tool on and let's really see where we are at here. And it's actually not terrible. I mean, we are at the top end of the channel. So I think we could maybe get a pullback first and then continue to rally up. But again, if we do break that 4-hour supply that I was just talking about, so if we break that, where I think we are headed, and it's pretty obvious to me, is most likely up to this daily supply, which is pretty much the basing of the origin of this entire crazy move we have seen on the dollar, where we just blasted through liquidity, blasted through a tested demand zone, so it wasn't even a trading setup. Anyways, we blasted through this area with a very nice daily supply above at 98.33. The basing is decent. The move away is fantastic. Overall, the overall move away is very good as well. So that's where I think we are headed, and it is well within the daily downward trend line as well. So if we break that 4-hour supply, this looks like a recovery, and we're most likely headed up to this daily supply. That's going to be the big test. This daily supply, in my opinion, is going to be the make or break situation. Is that monthly demand going to hold? The big question will be if this daily supply is going to hold. I think it could hold. One, because it's a good supply zone and it's within that daily downward trend line. If we break this supply zone and the trend line, that is going to be a very positive sign for the dollar, and I'll be looking to get in long on the dollar if we do create some sort of daily demand. But for now, if we break that 4-hour supply, we are expecting price to continue to go up to the daily supply at 98.33. Alrighty, on to the forecast for the Euro US dollar. So on the daily time frame, massive push up and pretty hard crash here on the euro. I'll come back to this daily chart in a second, but just want to show you the overall kind of bigger picture here on the daily time frame. And if you guys don't mind, hit that like button and subscribe, as all ad revenue is donated to my local hospice charity. You can see we just did another donation for the month of January. I appreciate every single one of you being able to continue to do these donations from all of the ad revenue from these weekly forecasts. So hit that like button and subscribe if you guys are new to the channel. As far as the Euro US dollar goes, it's kind of do a bottom up approach here. So on the 1-hour chart, we do have a very nice 1-hour downward trend line. Let's take a look at the channel tool. Let's see where we are at. And we are pretty much right below the 50% mark. So if you are going to short on a 5-minute chart, you can, as long as this trend line's holding. I would rather be doing it above the 50% mark. So if you're going to short on a 5-minute chart, I'd rather be doing it, like I said, above the 50% mark. Somewhere in this area makes the most sense to me. Now, if you notice, we do have a fresh 1-hour supply above at 1.19 with a potential liquidity trap right before. It's a little close for me to call that liquidity. I usually like to see it somewhere down here. So it's kind of making me nervous about the zone. If you are going to short at the zone, I'd be pretty aggressive with trade management, meaning I would look more than a 2-to-1. Be aggressive with putting your stop to break even, whatever you got to do. But it is a decent supply that removed demand down below and pretty much started the 1-hour downward trend line as well. So again, as long as this trend line's holding, 5-minute time frame shorts are good. If we break the trend line, we want to hold off on shorts here to here until we can hit the supply, and then we can hop on shorts again, in my opinion. And obviously, if we break this supply or the trend line, any demand zones there are going to be pretty nice potential buying opportunities here on the euro. And if we continue to go down, like, so if you are going to short, let's say you think, Kevin, no way we're going up, I want to short the euro. That's fine. As long as the downward trend line's holding on the 1 hour chart, shorts are going to be fine. And the good thing is we have very, very clear profit margin down to our daily demand at 117. So I think if we do continue to go in short, that's where we're most likely headed. And then at this point, when if we do contact this daily demand, then we can switch to a long trade, meaning we'll be looking for confirmation by trend lines being removed or zones being removed. So all shorts, profit margin down to daily demand at 1.17. And then again, if we hit this daily demand, then we can continue to look for longs on the euro. And we actually have a better daily demand zone all the way down below here. I'm not saying we're going to get a pullback, all the way down to this daily demand, but in my opinion, this is the supreme buying opportunity down at 114 if you are bullish on the euro. So just kind of summarize again, 1 hour downward trend line holding. As long as it's holding, you could be looking for shorts, but you might want to wait for a pullback closer to the trend line. If the trend line breaks, pullbacks up to the 1 hour supply could be good for a quick shorting opportunity. Or if you are really bearish and you think we're going to get all the way down to the daily demand, then you could be holding down to the daily demand, where we can then switch to a potential long trade. Alrighty, moving on to the forecast for gold. This has been the craziest day in gold I have personally ever seen in my over 6 years of trading. So definitely learning a lot here, right? I've been trading for over 6 years and I'm learning a lot. Look at this candle. It is absolutely crazy. I'm not shocked. I mean, I've been telling personal friends of mine that aren't in my group or anything, the crash on gold and silver is going to be crazy. And we did just get that. It was down over 10% today, I believe, on the day. And I mean, if you just zoom out, it's really nothing. I'm actually expecting to see pretty much a down year in gold, a whole year, in my opinion, maybe pulling back below 3,500 down to this monthly demand. I don't know if you can see the dotted lines. So I am kind of expecting to see that on gold. Obviously, I'm not just going to short based off of that prediction. But on the daily time frame, things have just gotten parabolic here. I mean, we caught this daily demand zone trade from down here, and I mean, what a trade that was. But look at this red candle here. That is absolutely insane. Whenever I see stuff like this, it makes me very, very nervous about trading gold. I personally, when I saw such an aggressive move up, I had no interest in trading gold anymore. It was just too aggressive. I mean, look at this price action. Whipped down here, right? Immediate shooting back up. Crazy wick here. This was already a tested zone anyways. Just blasting through areas like no issue. It's a very difficult chart to trade. Honestly, I just wouldn't really be trading this one right now unless you want to look at the 1 hour chart. The 1 hour chart is actually somewhat bearable, in my opinion, as far as looking somewhat consistent. We have a 1 hour downward trend. Let's throw a channel tool on. Let's see where we are at within this downward trend. If you look here, we are well below the 50% mark. So in my opinion, I think it's worth waiting for shorts until we can hit this 1 hour supply. It's kind of a little hidden zone at 49.85. I think wider stops in these market conditions are going to be good, guys. So typically, with supply and demand trades, we want to have our stop just somewhere nice up here, not right on the distal line, but just a little bit above. But in these market conditions, wider stops could be good, and maybe look for a lower risk reward, I think, in these market conditions. But it's a nice 1 hour supply. Again, we are a little overextended to the downside, so I think waiting for the supply could be good. It's well within the trend line as well, so I think it's a great potential opportunity for shorts. We do have a good supply above as well at 54.01. You could be looking for shorts off of that as well if you are bearish. Now, me personally, I'm not really, like I said, I think we could get a pullback on gold. I don't want to short it, though. I don't know if that makes any sense. Just like the S&P 500. Sometimes I am bearish on the S&P, but I just don't really want to short it because it's pretty much always in an uptrend. And right now on gold, we have weekly and macro uptrends. So I'm not a fan of shorting personally. So as somebody who wants to prefer to get in longs, or maybe you want to do that as well, what we could be doing, simply waiting for this supply and this downward trend line to be removed. And any demand there is going to be a very nice buying opportunity. That's what I'm going to be waiting for as a swing trader here on gold. And again, you could just be looking for shorts off of these zones, but I definitely recommend being pretty aggressive with trade management, maybe risking less considering the crazy volatility we've seen in gold. Risking less in a situation like this is what professional traders would be doing. Taking full risk on a gold trade in these market conditions, very risky, especially if you're going to be shorting. I know that would have worked out fantastic, but trust me, You're trading against a higher time frame trends. So as me as a swing trader, I'm going to wait for these supply zones to be removed, trend lines to be removed, waiting for demand zones to be removed, and looking for supply zones to be removed and demand zones to be formed. Let's say we break the supply in the downward trend line. We don't get any demand here. That's fine. If we push up, break the supply, if there's a demand zone there, I'll be looking for trades off of that demand zone as well. So the 4-hour chart, the daily chart, everything's kind of messy, but at least in the 1-hour chart, it's very clear what's going on. The trend is clear. Supply zones are clear. And then it's great for if you want to short. If you don't want to short, we just got to wait for the zones to be removed on gold. Alrighty, moving on to the forecast for the S&P 500. We have seen some very volatile moves here in the S&P 500, but sometimes it's good to get the overall picture. And, last week we did remove an all-time high, pushed above it, creating a new trend line here. So in my opinion, it's still very bullish on the S&P 500. And if we throw a channel tool on this, you can see we're well within the upper channel here, and we're at the pretty good spot to actually continue to look for longs, in my opinion, on the S&P 500. Somebody commented last week, oh, it looks like Tory trades trend lines or something like that. And that's probably the most offensive comment I've ever gotten on my channel. These are nothing like Tory trades trend lines. Some of her trend lines don't even make a new high. It's hilarious. But anyways, shots fired, I guess. But the commenter started it. I'm not actually upset about the comment. I think it was just a troll. But anyways, daily trend line holding nice here. It is definitely looking very bullish on the S&P 500. Now on the 4-hour chart, very unfortunate event as we had a good 4-hour demand zone here. Unfortunately, what can you do? Sometimes market conditions are like this and you get stopped out, and it is what it is. All I know is we caught this 4-hour demand zone down here last week. So that was a great trade, and sometimes you win, sometimes you lose. Nobody's winning 100%. Nobody's turning, $50 into 500 grand, like some people say, like I mentioned earlier. I'm just kidding. Anyways, enough with the jokes. On the 4-hour chart here, it is looking bullish still, in my opinion. We did break below this trend line, but what's interesting is the fact that we have the daily trend line that's continuing to hold. I don't really like trading this zone anymore since we did pierce below it, but in my opinion, it is still holding. And on the 1-hour chart, I actually like this view better. It is sideways. Usually don't want to trade in a sideways market, but the good thing about it is we had a trend line removed and a demand zone removed, and that was removed by this supply at 69.91. So, and actually there's liquidity. I just noticed this now. We have some sort of liquidity here. And I like the supply. Again, I don't really short the S&P 500 ever. It's one of the only markets where I have a rule in my rules where I don't short, right? I'll short any pair, any instrument really. This is one of those I just don't. So if you are going to short at the zone, I would like to see another reaction off of this resistance area. Then a pullback to that supply could be even better. And I wouldn't be greedy with take profit here. I'd be pretty aggressive with trade management. You could even look for confirmation trades on a 5-minute time frame inside of this zone, which is something we'll be looking for the members in the daily market breakdown video. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z, covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session, where members submit homework, and it's an interactive 1-hour call where we go over all of your homework and every trading related question, private access to myself inside of our private Discord group where I answer all of your trading related questions, and finally the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately, absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. So the S&P 500 is pretty much all going to revolve around this 1-hour supply. Again, quick shorts off this 1-hour supply could be good. As somebody who's not interested in shorting, maybe that's you as well. We just want to wait for the supply to be removed. If it gets removed, any demand there is going to be a very nice trading opportunity as well. And we wouldn't mind seeing this all-time high. I believe that's the all-time high right there. We wouldn't mind seeing this all-time high removed as well. So that's just another thing I'm going to mark out there. So the best case scenario for longs would be a break of this supply, break of the all-time high, and demand zone sitting well below the high, pull back down that demand zone would be fantastic. So as a swing trader who prefers longs, that's what I'm going to be looking for. And again, if you're bearish, that's fine. Just don't be greedy, right? We're not going to look for a crazy move. Yeah, they can happen, but you're trading against a daily trend, a weekly trend. Do you really want to shoot for, targeting the low here? It's worked out before, but me personally, I'd rather be looking for a quick 2-to-1, 1-to-1. Don't get greedy and wait for the longs. Alrighty, on to the forecast for the USDJPY. On the weekly chart, we just targeted this liquidity, this clear resistance area. It's not a supply zone. There's no good move away here. So we targeted that liquidity, and obviously we fell pretty hard here. It's very evident on the daily time frame, and I'll be honest, it's a tricky one to trade. To me, if you look at the bottom left screen, I'll zoom in a second, but it looks like we're headed up to that daily supply, 158. So really, the only situation I'm looking at right now is day trading long. And I don't day trade. I'm a swing trader. I know some of you are day traders. A lot of you probably are, and that's fine. And you're actually in luck because we have a 1-hour trend line that's being respected. Let me just fix this trend line. There we go. And if you look, the trend line is being respected. We are very overextended, though. As you can see, not only are we above the 50% mark, we are right at the high of the upper end of the channel. So I personally think it could be like, sure, price could take off here and you can miss a trade. That's fine. That would make me feel better than like buying at the top and then getting stopped out, right? I don't know if you guys understand what I'm saying. It just would make me, I'd rather just miss out on the trade than buy at the top and feel like an idiot. And me personally, I would rather be waiting for the 50% mark or lower to be hit and then continue to look for longs on a 5-minute chart. I think that would be much, much preferred, much safer. And again, yeah, you might avoid taking a trade, and that's fine. But as long as this trend line's holding, we could be looking for longs. We just, again, want to wait for maybe somewhat of a pullback closer to that 1-hour trend line. And the good thing is we have very, very clear profit margin up to the daily supply at 158.09. So it's a good time where like the profit margin is very clear. It's clear where we are headed if we do pull up to it. And then it's as simple as getting your profit, take your profit at the daily supply, or at least move your stop up close to the daily, close to where price is, so you can lock in some profit. Because who knows, maybe something like this happens where you blast through the supply, your stop is here, then you could keep moving it up and turn a 3-to-1 into a 10-to-1, right? That's possible. Trade management is very, very important. So if you are continuing to get in long, that's fine. Pullbacks up to the supply could be good. And then even here, we could switch to potential shorts, looking for H1 confirmation on the USDJPY. Already on to the forecast for the GBPUSD daily trend line, looking very good. Obviously, insane aggressive move to the upside. Channel view shows we are pretty overextended, and we actually pierced right above the upper part of the channel. Now we are back in. It's still very overextended in my opinion. It's definitely worth waiting for the 50% mark or lower to continue to get in long on the British pound. On the weekly chart, we actually have a weekly demand formed. It's been a long time since we've had a weekly zone formed. So this zone is at 1.346. This would be the ultimate pullback entry, in my opinion. I'm not saying buy the whole weekly zone, definitely not. If price does come back to there, we will be looking for confirmation, and that would be on an H4 or maybe an H1 chart. So that's what I'll be doing if price does pull back down to this weekly demand. I'm not just going to buy the entire weekly demand. It's just too big. I'd rather get lower time frame trades in there. So that'd be a great pullback. I would absolutely love a pullback down to that daily demand. I think it could be very, very well worth it. But in the meantime, if you want to trade the British pound, obviously we are kind of overextended to the upside, and price obviously is shooting down. The 1-hour trend line, though, very, very overextended. We are well below the lower end of the channel. So I'm going to keep the trend line for now. I want to see a pullback into the channel again, above the 50% mark. Then I think you could trade this downward trend line on a 5-minute chart. That's what makes sense to me. Being patient, waiting for a pullback, not just hopping on the hype and chasing, right? I think being patient, waiting for a pullback could be good. And if we get that, that would be great, because we have very clear profit margin down to our nearest potential entry, which is this 4-hour demand zone at 1.35. It's kind of a little hidden. It's not really hidden actually, but it's just not super noticeable. It's a rally-based rally, single candle basing at 1.354. It's a good zone, in my opinion. I think it's a decent zone we could see a move off of, maybe 2-to-1, even a 3-to-1 move based off of the higher time frame trends. So if you just look, where is that at in the weekly chart? And it's actually, it's a great pullback. Just considering on the daily chart, it'd be a great clean pullback. Like, and let's say you take a loss here, that's fine. At least you weren't buying up at the top, right? At least you were patient, waited for a pullback. That will be our 4-hour zone. I think it's well worth trading. And again, if you want to trade in short down to this 4-hour demand zone, there's tons of profit margin. We just need to wait for somewhat of a pullback near the trend line on the H1 chart. Clear profit margin down to the 4-hour demand where you could look to take profit, maybe hop on a potential long trade. And then if we break through that, that's fine. We're most likely headed down to that weekly demand where we can get an even better entry. Sometimes you got to take 2-3 losses to get the best trade and get a nice 5-to-1 trade. The power of risk reward is very powerful. Alrighty, on to the forecast for the USDCAD. And if you guys have not checked out my podcast, the Stoic Trading Psychology podcast, check it out. It is available anywhere you download your podcast. I also have a YouTube channel for it as well. Make sure you guys check it out to help with your trading psychology. On the USDCAD here on the weekly chart, we did remove this low, which has given us a weekly downward trend line. Definitely a very bearish sign. However, we are still into our weekly demand. Not really an area of interest for me, right? It's already been tested 1, 2, 3 times. So kind of makes me nervous about if this zone is going to hold or not. I still like the weekly supply above. It's above the trend line, but it's a good zone for potential shorts at 1.39. But obviously with the new low there, it's looking very bearish. We did pull back into this daily demand zone, very old zone. Not a trade I took, unfortunately, but that would have been a nice one there. Obviously, very clean daily downward trend and trend line here. We got a little bit overextended. We are maybe pulling back up to above the 50% mark where you can continue to look for shorts, in my opinion. So I know nobody's really trading the daily chart, so let's go to a 1-hour chart and a 4-hour chart. Let's see what's taking place. We pretty much have 2 options right now, in my opinion. Nice move off of our 4-hour zone, but that's a very, very old zone, pretty much irrelevant. But we do have a nice 4-hour downward trend line, and it's currently being tested right now as I speak. So really, as long as this 4-hour trend line's holding, we could be looking for 15-minute time frame shorts. But if we do break the 4-hour trend line, we have to hold off on shorts until we can hit the daily supply, or sorry, this little hidden base drop 1-hour supply at 1.366. As far as trade management goes here, I'm a little bit nervous on holding for a massive move because we are very overextended, like I said, on the daily chart, but it's actually not a bad pullback. So it could go both ways. If you don't feel comfortable holding for a 3-to-1 or more, get aggressive trade management. Move your stop to break even as soon as you can. Only look for a 1-to-1, 2-to-1. But that's our little hidden 1-hour supply that I think we definitely could see a move off of. It's kind of in the middle of the move. I like it for potential shorts. And I'm just noticing now we did remove a 1-hour area of supply, which has left us with a very clean area of 1-hour demand. I don't know how I feel about this zone. It's not a bad zone on its own. It did remove a very proven area of supply. We got 3 reactions off of that supply. So if you are bullish on the USDCAD, this would be our long trade, and we have very clear profit margin, right? The profit margin is very visible here. If you just take a risk reward tool, let's just say extra wide stop, just to be safe, profit margin 2.5-to-1, let's just say 2-to-1. It could be worth it, in my opinion, taking that setup, especially if you think we're very overextended and we're going to continue to go up. This would be our pullback entry long. Look to take profit at the 1-hour area of supply when we get up there, and then switch to a potential short trade and maybe even target the demand if it's still there. So again, I do prefer the shorts here based off of the the weekly and the daily trend. But it doesn't mean that we can't, get a nice little 1-hour demand zone trade like the zone I just pointed out. So a couple good zones here on the USDCAD. I'm looking forward to seeing, what takes place here. Alrighty, on to the forecast for the Aussie US dollar. Finally seeing some moves here on the weekly chart. I thought we were going to get the zone removed. I'm not going to get into a lesson here. I'm not calling that removed, but it's definitely a bullish sign. Obviously, in the daily chart, the overextendedness here was very, very visible. If we put a channel tool on, we got so overextended. So I'm not surprised to see, somewhat of a pullback here on the Aussie. And we actually have a good little hidden rally single candle basing zone at 0.677. So I'm not saying we're going to pull back down the zone, but if we do, I think it's a high probability trade. But obviously we want to look for lower time frame trades in there, but it's a high probability, higher time frame zone in my opinion. As far as trading the Aussie US dollar goes, it's really all going to revolve around this 1-hour chart. in my opinion. So as far as a trend line goes, I'm going to draw this trend line here. And really, we are very overextended. It is counter trend though, but I mean, since we're so overextended, I think looking for shorts on a 5-minute chart could be good as long as this 1-hour trend line is being respected. We are floating right around the 50% mark, but I still think it's a good time for 5-minute time frame shorts. As long as we are above the 50% mark, I think it's very, very reasonable. We do have 2 supply zones on the 1-hour chart above at 0.70, this one here, and one above at 0.706. It's difficult. One of the biggest questions I get is which zone's going to hold? Which zone's going to hold? Obviously, we don't know for sure. If you want to trade both zones with an entry at both, worst case scenario is you're down 2% if we blast right through it. You know, another decent case scenario is we break this one works. For a 2-to-1, you're up 1%, or a 3-to-1, you're up 2%. Me personally, I would rather just wait for the upper zone because not only is the move away better, but in my opinion, this is going to act as liquidity. So I think the better move is to wait for the supply above. I think that's where we could see the bigger move off of it. And again, it is counter trend. So I think being a little bit semi-aggressive with trade management could be good. Looking for 1-to-1, 2-to-1, stop to break even, stop loss to break even whenever you can, I think is going to be much, much preferred. So a couple zones here. I think the upper one is going to be the better zone. And then let's say you think the Aussie's really going to fall and you want to trade short at these zones and you don't know which one to pick. Maybe set a 1-to-1 take profit on this one and a larger take profit on that one because we could make a little money here and a lot of money there. It's another option. If you are bullish on the Aussie, I understand. I'm not really seeing any high quality pullback entries on the H4. So we either need to wait for zones formed by breaking this trend line. Maybe there's a demand zone there we can hop on long. Or if we remove these supply zones, any demand there is going to be a very nice trading opportunity. And obviously, I will have these zones on my charts for the Diamond members. On to the forecast for the USDCHF. This is CHF, sorry. This is very, very simple. I will keep it very simple for you guys. Right now, we have a 4-hour downward trend line. I would say we got a little overextended, and we are about to contact a 4-hour area of supply at 0.775. This is our nearest time frame, nearest zone for a short trade if you are still bearish on the USD Swiss. It's a decent zone. The basing's not bad. Move away is pretty good. The overall move away is not bad. So this is really our nearest supply zone for a potential short. And really, as long as this 4-hour trend line's holding, I think you could justify looking for 15-minute time frame shorts. However, let's say we break this zone. You take a loss. That's fine. We have to hold off on shorts until we can hit the daily area of supply, which is above, and it's a very good supply zone at 0.788. It's pretty much the origin of this entire move. So again, you could look for shorts right here, maybe somewhat aggressive with trade management, understanding that the bigger move is going to happen from the zone above. Something like that I think we could see if the dollar continues to go down. This is where the bigger move is going to happen from. And I'm not saying we're going to short the entire daily zone. We're going to look for H1 confirmation there, or H4 as a group. That's what we will be looking for. So again, we are very overextended. So any shorts now are kind of aggressive, but that H4 zone I was saying was good. Let me just pull it back up again. So again, H4 zone, that's nearest to price. That's our nearest entry. Somewhat aggressive with trade management could be good. If we break the zone, break the downward trend line, we're most likely headed up to the daily supply, where we can then look for a continuation trade to the downside, looking for confirmation. And if you are bullish, we just want to be watching this 1-hour trend, and you could really just be day trading that up to this daily supply, and then I would look to take profit. Alrighty, on to the forecast for crude oil. Make sure you guys go and give me a follow on Instagram. Send me a message. Say, hey, Kevin, what's up? Actually, I've been telling you guys to do this the last couple weeks, and I've gotten a few messages, very nice messages. So always appreciate your support, guys. I really do. On the weekly chart here, I was hoping we could get a pullback down to our weekly demand at 53.85. It doesn't look like we're getting that. I still think it's possible, but obviously I won't deny the strength of oil, and I'm not just going to hop on short thinking that. It doesn't make much sense. To me, it looks like we're headed up to supply at 75.42. I think we definitely could see a move off of that zone. But for now, trading crude oil, that's what I just said. Trading crude oil, very, very tricky. We do have a 4-hour upward trend. We are extremely overextended if you view this as a channel. We are so overextended right now. We are floating above the trend line. In my opinion, I'm actually going to remove this trend line now as it's pretty much irrelevant. And the bad news is I'm not really seeing any pullback entries here. I am seeing a potential long trade all the way down at 58.32. If you've been following my forecast, you can attest to me pointing out this 4-hour zone. But it's so old now that basically for me to trade at this zone, I would like to see a reaction off of this support liquidity again. Then I would feel comfortable with a wide stop trading at that zone. But for now, it's tricky. I still think longs are preferred. Again, I don't day trade, but if I did, this is what I would be doing. I would simply be waiting for this high to be removed because obviously we are just kind of basing out right now. We don't really know where price is going to go. Based off of the 4-hour chart, we could predict that price is going to go up. But for me personally, I want to see evidence of that. I want to see evidence of this range breaking. So if we do break this high, we have a very clear pivot low here that we could be using as a trend line. And then if this trend line is formed in the H1, this is the trend line that will act as your guide for 5-minute time frame longs. And as long as this trend line's holding, 5-minute time frame longs are good. But we need to see evidence of that. We need to have a trend line that will act as our guide, that will act as our support. That's what I'd prefer to see here. So until we can get that, I just personally would probably be holding off on crude oil right now. Alrighty, on to Bitcoin here. Things were looking very good on Bitcoin. We created a daily upward trend line, and that was very short-lived as we tested the trend line and broke below it. We did create a little daily supply at 91,917. It's a little hidden drop-based drop. I think it's a great area to look for a potential short trade. Even on the lower time frames, I think could be good inside of that daily supply. So if we do start to see Bitcoin rally up again, it's not going to really be the most bullish sign until we can remove that supply. I'm going to be bearish at that supply zone, me personally. What I think we could see is a pullback up to that daily supply to fuel for the bigger move to the downside on the weekly chart. I think we could be doing that to fuel for that move down to weekly demand at 71,002. I think this is a fantastic buying opportunity, even for a long-term investment in Bitcoin, at least to target the high here. I don't know how much I believe in Bitcoin long-term, whatever. I'm not going to get into it, but it's a clear area of liquidity support with the demand down below. I think it's a high probability situation if we do get down to that weekly demand to see a move to the upside, at least to 104.14. So right now it is looking weak. Looks like we will be pulling back down to that weekly demand. So the big question now is, will we be pulling up to the daily supply first? As far as trading it goes on the lower time frames, the nearest zone I am seeing is on this 1-hour chart. That was pretty much the origin of this entire massive move at 87.585. Obviously, we're so overextended at the downside. We want to be waiting for a pullback up to that supply for a short trade. I would be somewhat aggressive with trade management due to the fact that the better daily supply is sitting above, but it doesn't mean we can't see a small 1-to-1, 2-to-1 trade off of a zone like this. So I would just be a little bit aggressive with trade management if you are going to short at that 1-hour area of supply. Another way to view it is on this 4-hour time frame. Very clean 4-hour downward trend line here. And as long as this trend line's holding, we could justify looking for shorts on a 15-minute chart. We are pretty overextended right now, so I'd rather be doing that above the 50% mark. Then we could look for 15-minute time frame shorts, like I was saying. So definitely bearish here on Bitcoin. Just the big question now is how much are we going to pull back if we do, and then will that pullback result in another drop down to that weekly demand? If you guys want access to my full-length forecast, join the Diamond membership where you will have access to that as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.